Welcome everyone to the video. We're going to be talking about Facebook earnings and the fact that they were up after hours when earnings were announced. Now I know this may come as a shock to some people because, a lot of people who just wanted to hate on the stock or company were saying, this is a dying company and,
Facebook sucks!
You hear that?
Facebook falls flatter than a pancake!
Facebook is a dying company. Facebook, more like dead book. Meta stock, more like meta shit.
Facebook daily active users down!
Okay, everyone, but all jokes aside, they had a relatively good quarter, and I've got it up on the screen here, so let's go ahead and take a look at some of what happened during earnings. So first of all, let's get out of the way that Facebook kind of knew there was going to be some turmoil in terms of their earnings because of what happened with Apple, and basically their ability to earn as much revenue got slashed by, I think they estimated something like 10%. So yeah, Facebook fell so heavily after last earnings because of how low they guided. It wasn't really the earnings that particular quarter itself. It was for Q4. That was the best quarter they've ever had. It was more so the guidance they put out was much lower than anyone was expecting. And I think part of why they, did relatively well in terms of this earnings for this quarter was because they guided low. They guided relatively low to give themselves some cushion, which was smart. So you have the earnings per share here was $2.72 versus the $2.56 that was expected. You have a revenue of $27.91 billion versus $28.2 billion, which was expected. So they didn't quite meet the expected revenue, but they basically did. This is just, they're both so close to 28. They missed, but I call that missing by like a sliver. But they beat the earnings per share very well. Okay, daily active users is up. I thought this was a dying company. How could daily active users be going up? That doesn't make any sense. And something that sort of I was expecting would happen, the average revenue per user was $9.54 versus $9.50. So I want to highlight just a couple things from that. Again, yes, the bad is they missed the revenue, but in my opinion, it's not my opinion. The numbers are right there. It's no big deal. That was such an incredibly small miss that it was very much outshined by them beating EPS by much more than analysts were expecting. Another good highlight is daily active users are up from before. And remember that this is a dying company, right? This is a dying company. No one uses Facebook. Facebook's dying. Then how do you explain that the daily active users make up about 1/4 of the world's population? And the fact that daily active users are up. And again, for anyone who needs a little reference point, the world's population is close to 8 billion. Daily active users are close to 2 billion. Their daily active users make up roughly 1/4 of the entire world's population, and that's not even considering the fact that a lot of the world doesn't have access to internet. And remember, we're talking daily active users, people who use Facebook every single day. If we're talking monthly active users, it's actually 2.94 billion. Or more than 1/3 of the world's population. Facebook's not going anywhere, people. They're still making a lot of money. They beat on the expectations of how much revenue could be made per active user. And I have a feeling that in time they may find a way to capitalize more on how much revenue they can make per user. So if Facebook can find a way to capitalize even more and more on maximizing revenue per user, and if they take the time to work around the fact that they kind of lost revenue that could be made because of, Apple's new iOS policy. And trust me, a multi-billion-dollar company like this that's extremely profitable is probably not going to have too much of a problem figuring out a way around that. Well, okay, anyways, now that we've gone over earnings, I actually wanted to run a DCF model on Facebook. Now, before we go ahead and run this DCF model, though, I want to give just a little reference point. The last DCF model I ran on Facebook was 10% revenue growth on average over the next 5 years with a 30% free cash flow margin. And the fair value came out to around $294 a share. Now, this time around for the DCF model, I am going stupidly conservative. Basically, in my opinion, the worst case scenario that could possibly happen for Facebook. Okay, so I have it pulled up on the screen here. 5% revenue growth over the next 5 years, grows out to the year 2026 at about $150 billion in revenue. Then we needed a free cash flow margin. The last time I ran any of these models for Facebook, I used a 30% free cash flow margin, which I thought was being relatively conservative. However, I would like to acknowledge that in the last 5 years, the lowest free cash flow margin they had was 27.5. So that's what we're going to go ahead and use for this worst case scenario, extremely conservative model. And so after we grew out the revenues by only 5% each year to the year 2026, we apply this very, very conservative free cash flow margin of 27.5% to all of our projected revenues. We get a terminal value by applying a weighted average cost of capital. This is a figure you can find on finbox.com if you're curious, and I actually applied a higher weighted average cost of capital in this model than I did in my other models. We also apply a perpetual growth rate of 2.5%. We end up getting the terminal value here. We apply the 12% discount rate, or the rate of return we want. You add up all the values, divide by shares outstanding, and I get an intrinsic value of 202.32, or let's call it roughly 202 fair value. So look, I run a model that's 5% revenue growth over the next 5 years, which I think is silly low. I also apply a free cash flow margin that is the lowest they had in the last 5 years, and I think is much too low. But again, we're doing a worst case scenario DCF model for Facebook right now. And worst case scenario, fair value is 202 a share. Worst case scenario. They were at like 170 something the other day, but after earnings jumped up, and last price I saw was something like 207 a share. So after they kind of did really well on this earnings, as I expected they would, Facebook is very close to fair value based on my worst case scenario model. Throw in the fact that the company is very profitable, has a lot of cash on their balance sheet, and with the amount of cash they have on their balance sheet, they could do things like continue to invest into the future for the metaverse. Also, with the crazy amount of cash they have on their balance sheet, they could do a share buyback. And of course, we know whenever there's a buyback for shares, that just gives shareholders more value. You know, it's funny when a company is looking pretty bad, there's a lot of FUD around it, like, ooh, they, gave the lower guidance, and there's FUD around it. But to be honest, this was a good quarter for them. And I think this quarter kind of disproves the silly, FUD that people were trying to spread that, oh, this is a dying company. I mean, look, it's okay if you don't like Facebook, but, when your daily active users make up 1/4 of the world's population, you're not going anywhere for a while. Call it what you want, but, my worst case scenario, the worst of the worst, puts it at 202 in fair value. And I've run other models that I think are more reasonable, like 10% revenue growth rate, and the fair value is much higher. So take that as you will. I personally think that even after the jump they just had, that Facebook is a very good buy right now. And according to the model, it's pretty much in fair value right now, but according to other models I've done, it's definitely a buy. So what do you think about Facebook stock? It's okay to share any opinion you have. It doesn't have to be in, congruence with my opinion. Do you feel that Facebook really is just a dying company no one uses anymore? Do you feel that they're a good value right now to buy? Do you currently own Facebook shares? Let me know all your thoughts about Facebook down below in the comments section. And that's all I've got for you guys in this video, and I will see you in the next one.